G'day expats and welcome to another episode of Expat Chat, episode 179 today. And guess what? Me and James doing the tour, as always, week in, week out. Love it. G'day James, how are you, mate?
Good morning, Brett. And for those who are joining us on YouTube or via Spotify, your podcast hoster of choice, I'm joined with Brett Evans, the Managing Director and Founding Director of the Atlas Wealth Group over in the Middle East at the moment, looking after the EMEA market, which is very broad. There's a lot going on again in the Middle East. We thought it'd calm down. Now it's picking back up again. Are you keeping your head down?
Mate, yeah, you just soldier on. Still a good excuse to have a barbecue on a Saturday. Just got to keep an eye
Yep.
above. But apart from that, we kick on. And for the folks, who are new to the channel, g'day. And joined by my mate and colleague and managing director for the APAC region, Mr. James Ridley. So, mate, today we're going to have a very boring chat, but a necessary chat. It's the end of financial year checklist. Yes, it's our equivalent of Christmas. Not when it comes to paperwork, chasing up clients and everything, but it's an important time. And before
Yeah.
we kick off the show, let's get the jingle out of the way. All the information we're talked about to these amazing people today should be treated as information and educational purposes only. Please do not construe this as personal advice. If you do need to get personal advice, please speak to a licensed specialist like Atlas.
Yeah, absolutely. And a financial year, an important time of the year for Australian expats. And often I think Aussies, they just forget about it in terms of what can I be doing just before 30th of June to either get myself ready or do a bit of quick tax planning, tax minimization, depend on your assets, your asset profile, and that's back in Australia. Um, a few things come to mind, depending also how many times you come back to Australia. This is actually a really important one. I think this will get under the microscope a bit more as the probably powers that be of the ATO get a bit better, but probably the time in which you've come back to Australia throughout the financial year. So just making sure you're not doing anything which could cause a bit of a residency review, a tax residency review in the event you're living in and working overseas. I think as time gets on with the data sharing that we're seeing right now, I think we could see more cases coming out. We know at
Spot
some
on.
point we're going to get the update on the residency rules once more. Right now, that we're just going to have to see what happens with the latest 2026-2027 budget measures next week, actually, the latest legislation of CGT, negative gearing, that enters the Senate. So we'll see how that tracks. Remember,
Mega
in the Senate,
two-day debate, debating,
mega two-day debate. Yeah. Yeah.
30 years of tax reform and to be discussed over 2 days. So yeah, we
Yeah,
should
it
have it
will.
done by lunchtime on the first day.
Yeah, well, at least the number is a little bit different. Remember, in the lower house, Labor has it by an absolute majority.
Yeah.
Senate, this is where things can get a little bit interesting. So we'll wait and see. But we should know by the end of next week how it's
Yep.
tracking. And then that'll give us a good read on the trust legislation that should come out later in the year. But if you've come back to Australia, consider how many days you've been back, things that you've been doing, and that this is down to your habits, your individual circumstances when you're back in Australia, just to make sure you haven't maybe triggered residency again. So a bit of a residency review, that's really important. Rental properties. If we have a rental property, maybe a former main residence, which was rented out, probably assessing whether you might pay some tax on the net income. So gross income, rental income, you got your tax deductions, interest expense, you've got your depreciation, council rates, insurance, all those sort of things. If it's going to be positively geared, then you might have some income tax to pay as a non-resident. So sometimes we see people making use of contributions to super,
Yep.
doing a Division 290. That's everywhere these days. We see a lot of it. It's not a bad strategy at all. If you're in the US, just be careful of that one because obviously your US accountant might disagree because it could
Yeah.
accidentally trigger that foreign grantor trust treatment. But that's a really important one. I think if I was probably considering the layer of Australian super, another one would be insurance. This isn't a financial year item. This is just an everyday item. When you look at the insurance that you hold through your super, because you're no longer meeting the ordinary definition of an Australian resident, sometimes the insurance does become invalid, but you don't really find out until after the fact and you drill down, you do a review, you talk to one of the assessors or the underwriters. So finding out, assessing whether it's still valid whilst you're living overseas is really important. Otherwise, if it isn't, you're just paying insurance premiums and it's just an extra cost for you for no reason. Um, Another one, shares, ETFs, managed funds, probably being a bit mindful around the withholding tax, making sure they're being treated correctly.
Yeah, withholding tax is a big one. I think that's one we catch a lot of folks out on when they send us through a statement from ComSec and they're getting unfranked dividend payments and there's no money being held back. And it's like, ooh, I know what's going on here. And then you look at the address and it's Manly. Yeah, not Dubai. So it's like, okay, ComSec thinks you live
Yeah.
in Manly, not Dubai. So yeah, that's a big one as well too. And I think, yeah, we've seen clients spend a lot of money refiling their tax returns, more money than they actually owe the ATO,
Yep.
which is hilarious. Yeah, I think the record was this client owed the ATO $278 and spent $3,000 in refiling his tax returns, all because he didn't want to pay an advisory fee, which would have been a lot
Yep.
less. So
Yep.
be careful what you wish for. My other laundry list item is this is for those folks out there who have talked about managing their finances and saving money and doing something. This is your 6 monthly kick up the butt to get started. We're meeting so many
Yep.
folks who are finding every excuse under the sun. The camel didn't jump over the moon. My daughter kicked a toe. Now's the time. There's a lot of folks out there we're meeting who they're now sort of 1, 2, maybe 3 years into their expat journey
Hmm.
and they've done nothing. So this is your 6 monthly kick up the backside, folks. I'll give you another one in December, but please start it. And what we're going through right now is a classic example when you think about with, obviously the Middle East conflict, what's going on. People put on hold
Mm.
because of this. Guess what? Markets are actually up from January to now when you have
Yeah.
a balanced portfolio with a bit of US and a bit of Europe and a bit of Australia and your fixed interest and Asian assets,
Hmm.
markets are up. So
Hmm.
regional conflict is not an excuse not to invest. If you're taking a 10-year time frame view, this is going to be a pimple on the bloody nose of your portfolio when it comes to the size of everything. So please start. There's no excuses not to. In actual fact, if you are concerned by the markets, great, buy because you're getting it at a relative discount to where it was pre-war. If you look back
Yeah.
to the ASX, the FTSE, Europe, they're all below where we were back in the 20th of February when this all kicked off. So that's
Yeah.
another one as well too. The one I would like to highlight, and it's an addendum to what you mentioned before about rental properties, investment properties, folks, please, please, please look at how much money is sitting in your offset account. The amount of
Yep.
people we are now meeting who have more money in the offset account than is actually the mortgage
Yeah.
is starting to get a bit crazy because people get that analysis paralysis. What do I do with the money? I'm just going to chuck it on the offset. Not only have
Mm.
you created a problem that, James mentioned, where you're creating positive cash flow, you're paying
Mm.
30% tax to the ATO. They thank you for the donation and Albo will spend it wisely, trust me. But
Hmm.
it means that you're not getting an effective rate of return because the bank won't give you money. So if your loan is 800 and you've got 900 or $1 million sitting in that offset account, you're not getting
Offset. Yep.
zero return on that 100, $200,000.
Oh,
Once again,
no.
people will take the money and run. But don't, please come on, guys. It's time to be an adult and make your time count, when it comes
Yeah.
to managing your finances because you might go, oh yeah, I should look at that. And then another 6 months goes away. And then if you're looking at, a 6%, 7% effective rate of return on 100 grand, that's 7 grand.
Yeah. There's a
So
lot.
pay attention, folks.
Yeah, absolutely. And it's that time of the year. If you have HEX, you do have a HEX lodgement coming up. That's the end of the financial year, capturing your worldwide income, regardless of you being a non-resident for a potential repayment. Speak to your tax account on the three different methods that they can use to lodge that, because there's sort of three different methods. One can help
Simple,
reduce the
complex,
taxable income.
comprehensive, is it? I think, from memory.
Yep, yep, exactly. On the rental properties, often get a lot of clients prepaying interest expenses right now because they can front load that tax deduction. Obviously, next year they won't get the deduction, but there might be some reasons for that. I can see that coming in the future with this whole negative gearing change and shift potentially. Um, Shares and ETFs, we covered off. That's a really common one, to be honest, at the moment.
Yeah.
The cash and the offset's an interesting one. I think we'll do another session on structuring your debt appropriately, especially when you leave and when you come back. I just see a
Yeah.
few things getting done incorrectly there when it comes to creating a mixed use loan, which gives the accountant a bit of headache where non-deductible loan is accidentally being claimed as deductible. ATO hits you up
Redraws.
and then you've got to
Yeah.
go back and substantiate, and often you've done the wrong thing and you've got a bit of tax to pay off the back of it or a penalty. So that's really, really important. And if it is your first time that you've actually moved overseas in the current financial year, well, this is the year in which you'll declare yourself as a non-resident. You'll have deemed disposal to consider and
Can we just
likely
pause
opt
there?
into.
Deemed disposal, deemed disposal, deemed disposal. People do miss deemed disposal. It drives me nuts. And shame on the accountants who are providing advice back in Oz who don't tell
Mm.
clients about this, because we're seeing a lot at the moment. When we talk to clients, my accountant didn't tell me this. And guys, deemed disposal, if you do own shares, please, please, please look into it.
Mhm.
We actually are writing an article because actually I've met two people in the last week. They Google the term, does Australia do an exit tax? And essentially that's what deemed disposal is. So there's a
Yeah, it
new
is.
blog coming out. I wrote it with Ben Turner because he's obviously our guru on the tax side. Not sure what I'm a guru in, but anyway, guru is something. But we wrote this article, and it's virtually the same article we write when we talk about deemed disposal, but from a search ability point of view. We've actually done another article. That's how important this is, because we are seeing people tearing up cash for no reason because they didn't do a deemed disposal, and they're probably going to save themselves 50, 100 grand in capital gains tax
Tax.
after they've been overseas for 5 years, when in actual
Yeah.
fact, if they cut the umbilical cord 5 years ago when they did it. So yeah, as James said, when you're doing your tax return, please put a gun to your accountant's head and say, do I need to do a deemed disposal? Because it is so important. It really starting to piss me off.
Oh yeah, absolutely. And I mean, if this is the year that you're leaving, there's a lot of other sort of loops that you'll be closing off. Private health insurance doesn't apply to you anymore because you're not, copying the Medicare levy. So therefore, likely putting it on hold. But often you do just forget about it and you let it roll on, maybe just in case you need to come back briefly for a couple of weeks or something like that. Um, but this is the year that you'll be declaring yourself as a non-resident. The accountant obviously makes the declaration. By now, if you have a MyGov, you should be uploading and updating the details on MyGov. If you go to the ATO tab, there's literally a section there which talks about overseas, like notification or address notification that you've moved overseas. So use that to reaffirm your non-residency ideally, and the fact that, the move that you've made is likely permanent for the next couple of years.
And just
Um,
on MyGov, make sure you turn off two-factor authentication with your mobile number,
yep,
because a lot of times it doesn't work overseas. So you can use a Microsoft or a Google MFA, switch it to that on your MyGov before you leave the
yep.
country, because a lot of people have to cancel their MyGov and do a whole new one, because they can't get back into it.
Yeah, that's right. And what you can do as an extension to that is, if you're not on the My ID system just yet, you should look at moving over to it. That sort of moves away from the 2FA model by getting an SMSF, and it just sends you, essentially, you have to log on to another app and then approve the code. So it only needs obviously login access, internet access for that. So if you haven't made the step to My ID, because a lot of people haven't, you should just look at doing it, tying it off. It's
Didn't
a
even know
much
it
better system.
existed. There you go. I'm learning today too.
They There you go. I only know that because I had to log in this morning to approve something. But with that in mind, yeah, this is sort of the year that you'll be closing off a lot. Even if you're renting out your property for the first time, little things, do you look at getting a depreciation schedule, that extra tax claim, especially if you're renting out the former main residence, that gives you obviously these annual tax benefits. But if it is just an investment property, remember depreciation does come back, and it obviously decreases, sorry, the cost base of the property if you ever sell it. So that's a consideration to talk with your advisor or your accountant, all these little things to make sure you just, keep yourself above board, and don't leave the tax return for a year or 2 years or anything like that as we wind out this end of financial year. Start preparing things like, if you're renting out the property, consolidate the rental expenses, which are going to be tax deductible, because you would have probably paid most of them already for the full year. And
Spot
then
on.
that way, when you get your rental summary, great, send off to your account, get it squared away, lock it in, off you go. Often I feel that a lot of Australians forget about Part 4A and the ability for the ATO to audit you. They can go
Yeah.
back and audit all tax returns that you filed in the last 4 years, not just the last 4 financial years, the last 4 years of tax returns.
Yeah.
So if you today are lodging last 9 years of tax returns, and then you lodge your next one in July, they can lodge 10 years worth of financial year tax
Audits.
returns because you've only lodged them recently. So
Yep.
really important to get it closed off, get it taken care of, de-risk a bit there. No one likes doing their tax. I get it. Trust me, former tax accountant, but you've got to just get it sorted. And the longer you leave it, the harder it gets to collect all that information.
I think, I always say to my clients, follow what I do. I'm an expat. I'm experiencing the same problems you guys are. I delegate. I have an accountant who does my tax returns. I don't try and do it myself. And I have all the tools under the sun. There's no excuse now with, especially with Atlas Tax, our tax that amount of depth and experience in that team is just solid. You got Ben, Lauren, Josh, all storied accountants with a lot of experience on the expat side. There's no reason not to delegate. And I don't think those guys charge a premium on what they should, given that it's more complex than a standard domestic return. People are often
Yeah.
quite surprised when they get the bill and they're like, oh, okay, that's actually pretty reasonable given how complex it is. So don't worry, folks, Ben and the team don't charge sheep stations. They charge a commensurate amount, which, I think is fair, but, certainly not excessive. And we've seen some crazy numbers. I saw a number the other day that a client showed me. Mid-tier firm in Sydney wanted to charge 5,000 for 2 returns as an expat. I was like, what are they
Rubbish.
doing? Are they flying over to visit you and sit down and help you write the paperwork and air tickets and stuff? I just couldn't understand it. So yeah, as James said, get your tax return done. It's a pain. I know I get the emails from my accountant going, you need to send me this and this and this. And I put it in my filing tray and I forget about it. And then I come back and just do it, guys. Please, please,
Yep.
please. Because once it's done, as James says, you're starting the counter and then they can't go back any further from those
Yep.
4 years.
Absolutely. And I think residency is one of those areas which I think the AHL focus a little bit more on in the coming years, especially as technology improves to be able to obviously consolidate the data and identify who might be high risk to actually being a tax resident when they think they're a non-resident and they're doing it because they're in the
Data
Middle East,
mapping and all that sort of stuff
tax-free
and
income.
trying to live the best of both worlds. And, 20 years
Oh,
ago,
yeah.
you get away with it. Now
Oh, yeah.
it's a matter of
Yep.
time. So,
Yep.
mate, I think
Absolutely.
people have got the message. They've got a bit of homework to do for this financial year. So, as I
Mhm.
said, guys and girls, please, we're not saying this for lip service. James and I have better things to do, honestly, than rant on about this sort of stuff. But it is disappointing when we see good people who could have got better outcomes by just taking this
Mm.
stuff seriously. So hence the passion, hence why we're sort of crowing on about it. But mate, I think we'll leave the good folks there today to finish their walk,
Yep.
finish their drive, finish their run on the treadmill, and
Sounds good.
we'll catch you on the next episode.
Sounds good. Thanks for tuning in, guys. See you on the next episode. Thanks, Brett.
Thanks, guys. Take care.